Good morning, it's Harvey Jackson. Just going to get through some. There's always lots of topics at this time of year. Weather's always in focus, but wheat's rallying. And let's just get into it here. Russia, Ukraine strikes vessels in Black Sea. I heard reports that it's even more than what's reported on this article. But whatever. Ukraine said it hit 6 Russian tankers and 2 tugboats. Russia said it hit a Ukrainian vessel and speedboat near Odessa. And shipping in the Sea of Azov remains restrictive, and tensions have pushed wheat prices higher. It does talk about some of the gains that we've seen in valuation. There's a 7% rise in Euronext Paris wheat, only 5% on the Chicago Board of Trade. So, but the Euronext actually has taken the biggest gain. And I should maybe show a graphic, but Russia's number 1 exporter. Europe is number 2. Canada usually sits in number 3. Australia behind that, and then farther down the line, it's Ukraine as well. And and it's all speculative what percent, but if you're going to impact 30% of wheat exports through the Black Sea from both Ukraine and Russia, that's what's gotten the market really excited. But there's also other things that are going on in the wheat market as well. You've got the hot weather and harvest going on in Europe. It almost appears to me that there's something going on in Europe as far as harvest quantity and quality there as well. You have the biggest gain in Europe in both the canola or the rapeseed and on the wheat. So Ukraine says it will protect the ports, even though they've already gotten hit from all reports. So it's been protected here. NOPA released its crush numbers yesterday, and it was better than expected. It was 214 million bushels of soybeans above trade estimates of around 204. 16% from June. Soybean oil stocks fell actually below the trade expectations. So that means that it's putting it a lot more into processing and further processing, likely into renewable diesel. So you can see that your stocks are dwindling, which is positive for canola and soybean oil for sure. U.S. fires first shots at new tariffs on offensive of 25%. Tax on Brazil imports. So I just want to maybe highlight this. Lula has, the president of Brazil, has put his own ego, and I'm going to say Carney is, the same kind of a scenario there. So, but Brazil tariffs would apply to thousands of imports, including sugar, egg machinery, apparel, electric machinery, paper, and steel. Investigation into Brazil opened up late July, cited several alleged unfair practices, including illegal deforestation and Brazil's instant payment system, PIX, which the U.S. government argues disadvantaged credit. So boo-hoo-hoo. Yeah, some other country is actually doing things that good for their own country and not following another country's rules. Well, Carney's doing exactly the same thing. Everything is not. It's for himself and yeah. Anyway, the Bank of Canada came up with some expectations. I just like how Kurt maybe just highlight this area here.
The Governing Council has maintained the policy interest rate at 2.25%. We have 3 key messages. First, after stalling over the past year, economic growth looks to have resumed in Canada. While U.S. trade policy continues to be a headwind, consumers have been resilient and businesses are adapting. Second, inflation in Canada is poised to ease, provided global oil prices decline from elevated levels. And third, uncertainty remains high. The conflict in the Middle East has re-escalated in recent days, and trade discussions with the United States remain ongoing. The governing...
Yeah, so interestingly, he's missing the government's action and its policies to be able to stimulate the government here as well. It's always stifling the government. So U.S. inflation expectations may be nearing a big technical test, and so they've gotten inflation data coming out. They had the CPI, the PPI, and I think there's now retail sales coming out, I think, later today as well. But you can see here, this is just a highlighted area where the market's approaching again at its break-even inflation. You can see that some heat here, and you see a lot of smoke going. And I think on Toronto has got the as far as air quality, the worst in the world right now. So favorable long-range signals are looks like it's pumping moisture into those areas for corn and soybeans, and is it in time is the question. So here you've got the heat, and here's the smoke map here that I was talking about earlier. So what I want to just kind of draw your eye to is, these are all 7-day precipitation forecasts. So you got the European model, the European Artificial Intelligence (GFS), WPC, and NAMBI, and a lot of them for the first 7 days they do have some holes, all in a similar place for lack of moisture, and that's where the heat is at the moment. So you got 7 days of this persistence. But this is where it breaks all apart, because this, you got the European artificial, the GFS, and it's just showing that there's moisture differences when you get past that 7-day forecast. And I'll say it again, the 7-day forecast is not very accurate at all. And I could be wrong, but I only give like a 60% chance of 3-day forecast being right. So when you get 8 to 14 days, there's a lot of things that can change, and so what percent would that be? Pretty terrible, I'm sure. So I just picked a model, and what I'm keying in on, and I know the U.S. has got a factor there too, but you've got this all of a sudden just about the majority of your corn and soybean belt is got moisture, so the heat might not affect it near as much. But you look at what's going on in the prairies again. So our 2-week forecast, we're going to get some continued rain here. So just have a look at the market here. So canola is down 350 as we speak at 788.90. I still believe that the seasonality is in play here. So if we're going to buy some puts or something like that, this is a great level to have protected if we don't want to make any more sales for sure, or short the market here, whatever the preference is with the client and the broker here. But soybean oil basically stalled out at 72 cents. Crude oil shy of $80 here again. So crude and your diesel fuel is still up with another couple pennies. Soybeans above the $12 on the November, and spring wheat slightly up. So your December contract is 708. Your hard red winter at 722 for the September, and Chicago is up as well. Milling wheat is up, and corn and soybeans corn and oats are up as well. So this is an older story. So China opens Australian canola imports to private crushers as ties improve. This is 3 days old, and this could be the reason why some of the European stuff is rallying pretty hard as well. But here's our November canola, and here's your European rapeseed. It's broke above its highs that it's made earlier in the month, or last month, and the month before. So that's European rapeseed. There's some concerns there whether that's just a China story, or is it weather over there as well. I'm kind of leaning to both, maybe. Soybean oil, it really doesn't have any of the gains that the seeds have. So you got soybean seed, your European rapeseed, your Canadian canola as well. Here's your crude oil futures basically stalling here, not gaining. Unlike your diesel fuel, seems to still have a lot of strength there. Gasoline pulled back finally. Canadian dollar, these green candles, if we're going to look for an area that if it's going to continue to go there, you're probably looking at the 61.8, but it's also the same place where we had those previous lows. Previous lows become resistance as well, so that's right around the 71.9. Quick look at wheat here. So this is your European wheat, and it's had the biggest gains. And you can see it on the continuous chart, so you still got another, let's call it another $10 euro to go up per ton. And the laggard of them all is the Minneapolis. The Minneapolis hasn't had the gains that these other classes like your Kansas, your Chicago have had. You're almost trying to get back to the previous highs that we had a couple months ago with those classes, and Minneapolis is the laggard for sure. Corn futures laggard as well, but it's trend is your friend here. It is going up, and it is crossing over some of those moving averages, and it just has to likely get past that previous low, and it has, but we need to stick it there. Oat futures trend is your friend here as well, along with the corn, I think. I haven't talked about meats here for a while, but this has been quite the slide here. There's a pivot point right here where it's actually continued to fall apart. But when you look at these values, it's right where we are right now, or just slightly below here, where that previous low was, right? So right there somewhere. And your feeder cattle, it hasn't gone to its previous low either. But when you look at lean hogs, that is your trend is your friend there.